Hi everyone, thanks for joining me. Dion Zakuski, Branch Manager, Senior Wealth Advisor, and Portfolio Manager here again with you. And we're well into January. It's always an interesting month. There's new year, new forecasts, and suddenly everybody's convinced they know how the story is going to end. It's a bit like judging a hockey team after the first 5 games. Plenty of opinions, but not a lot of signal yet. So today, let's talk about what's actually happening in the markets, what matters for Canadian investors, and how we're positioning portfolios as we go into 2026. Then we'll bring in our associate Rachel to fill us in on 2026 rules around contribution limits. So let's start with the big picture. 2025 was a strong year across the board, and importantly, it wasn't just one line carrying the team. Global equities, commodities, and precious metals all finished positive, and we're going to look at some more details here. When we're looking at this chart, which measures asset class total return by year, looking on the far right-hand side, we can see that 2025 was really strong. If you asked, hey Dion, what made money last year? Easy answer, everything. Gold and precious metals had banner years, which also helped to propel the TSX higher, along with bank shares. Looking at Europe, emerging markets, and Asia, they also all had very strong years, as did the US markets as well, into the double digits. Interestingly, the US actually lagged the TSX for the first time in many years. In looking at the chart, we can also see that we're on a 3 to 4 year winning streak for investors as well. But what's different now is where the puck is going, not necessarily where it's been. Since last year, leadership has rotated away from just mega cap US names towards more global markets, including Canada. And that's healthy. It's kind of like rolling 4 lines instead of just double shifting your stars on a hockey team. You'll last longer going through the season. So let's talk about Canada. After sitting many years kind of in the penalty box, Canada has come back into the play. The loonie has finally broken out of a multi-year downtrend, and with precious metals such as gold staying high, potential more interest rate cuts coming from the US, we think this will likely increase the value of the Canadian dollar relative to the US dollar. Scotia forecasts it having a higher value going through 2026 as well. What about Canadian financials? So bank shares and insurance shares are finally breaking out relative to the TSX after years of just going sideways. This happened last spring when banks set aside millions of dollars for potential bad loans due to all of those trade tariffs. Well, those cushions weren't necessarily needed, and all those funds were put back into their businesses, which helped their earnings and share prices. This chart shows more. When we look at the Canadian financial market, we can see that they went relatively sideways in the first quarter of last year, had some pretty significant dips as we went through the tariff tantrum in the springtime, but after that, had a very strong rally to finish out 2025, actually outpacing the TSX in general. Now, bank and insurance shares aren't really flashy, but like a good penalty kill, they'll quietly help to win you games. So switching to a more global theme, one of the big questions we're getting these days is, will the economy hold up and keep markets moving higher? Our view is pretty straightforward. Yes, growth is slowing, but still positive out there. Markets and sectors maybe aren't dirt cheap, but valuations aren't really excessive, even in the technology and AI space, which we talked about a lot in our last video. Inflation is easing, this is good, and central banks are looking to cut interest rates instead of hiking them, particularly in the US, which is very positive for companies that makes money cheaper so that they can help expand their businesses. Markets are forward-looking, and actually the consensus for 2026 is it should be another very investor-friendly year. So what does all of this mean when it comes to portfolios? Well, we look at 3 things. Number 1, it's the old story, stay diversified. It's not a one trade, one theme market out there. Geopolitics, as we're currently seeing, will create market volatility, no doubt about that. But these are usually short-term in nature, and to be honest, it's a lot of nonsense as well. So we need to separate that from what's truly important. It could also provide some opportunities. So diversification will always be important. It's kind of like dressing for a Canadian winter. Those layers do matter, of course. Second would be looking at selective Canadian exposure, particularly in financials and consumer names where valuations still make sense. Third, we want to manage risk, not necessarily hide from it. Cash and bonds will always have a defensive place in portfolios, but you don't want to have too much of this thing on the bench as it can risk your long-term returns. But here's what we're not doing. We're not chasing last year's winners. And the biggest thing, we're not overreacting to every headline out there like it's sudden death over time. We need to separate what's noise and what's important and remember what's true to your long-term wealth plan. So, call us anytime if you do have questions. We're happy to help. And now let's bring in Rachel, who will talk to us about contribution limits for 2026.
Hi everyone. As we step into 2026, I just want to take some time to talk about something that is really important with financial planning, and that is contribution limits in your registered accounts. So starting with the tax-free savings account, in 2026, eligible individuals can contribute $7,000. Remember, if you haven't maxed out your previous years for your tax-free savings account, that contribution room will carry forward. So check your CRA account to see what you have left for space. On to the RSP. The contribution limit is based on 18% of earned income from the previous year. And for 2026, that is up to $32,490. And much like the tax-free savings account, that contribution room carries forward from previous years. For those of you that are interested in the First Home Savings Account, the annual contribution limit stays at $8,000 with a lifetime maximum limit of $40,000. The key to making these work for you is to take action early. So book some time with us. Let's build a strategy for you based on what your goals are. And thank you for watching.